Okay, awesome. Hi guys, thank you Renee for a wonderful presentation, and thank you guys for being here, and thank you Investor Inspiration for having me. So today I will be talking about how you can potentially earn $500 a day with a $5,000 account day trading futures. So if you're new to futures, if you're a stock trader and want to make the shift to futures, or if altogether you are new to trading, to day trading, I want this webinar to be an eye-opener for you. So here, before we begin, I just want to underline our very quickly our risk disclaimer, and basically what we're going to talk about here today is for educational purpose only. We're not registered nor licensed, and if you really feel the need to see financial advice, please consult your financial planner, broker, or advisor. Okay, so a little bit about myself. As you've heard from Renee, I've been a trader for many, many years, been trading for plus 13 years as a professional independent trader, means I am a retail trader. Prior to that, I've been I've been into the investment banking environment for over 10 years. I've been a proprietary trader. I'm the CEO and founder of TradeOutLoud.com. This is a trading education firm that is specialized in trading, educating individuals how to day trade and swing trade different assets such as equity, forex, and futures. And I'm the designer of a proprietary trading system that is based on price support resistance, specific trigger times, specific price zones, chart correlation, a strict set of trader rules, and a 10-point scoring system. What does this mean is that I have not invented this system. The system exists, and it is a system that only institutional traders trade upon. What I did, I customized it for the retail trader. If you want to reach me, of course, you can learn more about our products and services by visiting our website at TradeOutLoud.com. If you want to personally reach me, you can shoot me an email at info@TradeOutLoud.com, and you can like us on Facebook, follow us on Twitter, where we post a lot of trading ideas. Also on YouTube, I post the daily pre-market plan for futures especially, and for swing trading, because this is basically what I do. I day trade for 2 hours a day, and for the rest of the day I just watch my swing trades and try to manage my swing trades. So subscribe actually to our YouTube channel to receive this kind of information for free. You also get our swing trading for stocks, get our swing trading list before Monday open. And you also get the pre-market game plan for the major E-minis and the E-mini that we are trading on that particular day. You're going to find our favorite trade of the day along with the entry, the stop, and the target areas. Also, on LinkedIn, you can follow me on LinkedIn, where I post a lot of articles of and a lot of free information that I have shared with the financial media. So if you're asking yourself right now, what are your favorite things in life, whether it is a vacation that you want to take, you always dreamed of vacation, I don't know, in Greece or Italy or somewhere, whether it is more time that you want to spend with your family, or whether it is a second home or vacation home that you're working on, like for every little single thing that you wish in life, you know, except health, you need time and money. So the bottom line is that if you're caught in the rat race, the problem is that you don't have the time. You have the money because you're working, you're busy, you're working in a corporate world or not, so you don't really have the time. And obviously, if you have the time, you may not have the money. I know I know firsthand what it means to work in the corporate world, where you know you work so much, you get probably a week or two of vacation per year, and then your boss is telling you that you can't even take your fall vacation all in one time. You got to split it into 2 periods of time. So basically, if you're planning that European vacation, well, kiss that goodbye, because you can't achieve that in a week. You have very little time. So how are you going to get there? How are you going to get to that place where you're comfortable in your trading, and where you have some kind of support? Well, there are 2 things that you can do. If you're still working right now, and if you're thinking about futures trading, I'm telling you guys, it's the way to go, and I'm going to show you how I do it. And first of all, you can supplement your income. So start learning, supplementing your income with day trading trading futures. Day trading futures offers you a very flexible schedule. You can do it in the morning, you could do it in the afternoon, you could do it in the nighttime, you could do it in the very early hours in the morning, such as 3 a.m. If you're working in shifts, the market is always moving. It is almost a continuous market. It's almost open 24 hours. So you have the flexibility to work around your schedule. And you can start with this. You could start with supplementing your income. As you're growing as a trader and as you know what you're doing, you can move to a full-time trader, and that will provide you an income. And to be very honest, my schedule is a part-time trader because I only work from 9 to 11. I only day trade from 9 to 11. Needless to say that the market offered really great opportunities for the afternoon, but I wasn't in front of the market right now. So I had some other things to do. But you can work on a full-time schedule as a trader and get the full-time results just by focusing these 2 hours in the morning. But this requires maximum dedication. Here's our agenda for today, and like I've mentioned at the beginning, I want this class to be an eye-opener for those of you that are considering trading as a business career, or you don't have a successful method that works for you, or you're trading stocks and you want to make the shift to futures. So we're going to talk about the account size and the advantages of trading futures, the advantage of buying power and leverage. We're going to talk about charts and my personal trading universe and what I trade on a day-to-day basis, scanning for the right trade and what it requires and the time that you are required to do the particular scanning. There are certain tax advantages. I'm just going to touch upon 2 or 3 of them today. Cost of commissions, market liquidity, learn how to trade with the big sharks and what the big sharks are doing, and last but not least, I'm going to give you a glimpse into my own strategy and the strategy that I use every single day from 9 a.m. until 11 a.m. So for 2 hours, that's my focus point. Okay, so first I want to ask you guys in the room, how many of you in here are already futures traders? Type a 1 in the room if there are any futures traders right here. I just want to see how many of you have been already trading futures, and if you're trading futures successfully, and how's that working for you? Okay, I'm just waiting for, okay, and if you're a stock trader, type a 2 in the room. Okay. All right, so I'm sure that a lot of you that are stock traders here in the room already know that in order to trade the stock market, you need a quite large account size, right, in order to make great money and in order to produce an income, right? I mean, I think it's relatively hard to make a living with a $25,000 account, okay? But needless to say that you only need $5,000 to open a futures account. So here you have it, $5,000 versus $25,000. So guess what? One of the reasons a lot of traders gravitate towards trading futures is the actual relatively low startup cost. It only requires $5,000 compared to the stock market, where you're required to have at least $30,000 to open a day trading account, and you must maintain a $25,000 status trading. You have to maintain $25,000 to maintain your day trading status, because guess what happens? If you fall below the $25,000, you can't day trade anymore. You're done. You only can do is swing trade. Okay, but the futures market allows you to open an account for as little as $5,000, and best of all, you really don't have to maintain this amount, because as long as you have sufficient cash in your account to cover the margin requirements to trade the specific commodity that you're interested in trading, you can actually have a balance of $700 to $800 and still trade futures. Okay, so this is a great advantage here. Let's say you're a beginner trader, and as in any beginning, you incur losses. So you lose $1,000, you lose $2,000, you lose $3,000, you lose $4,000, but you still have $1,000. Guess what? With that $1,000, I can show you what you can still do in your account. Okay, So let's talk a little bit about leverage, because we said let's pretend just for a second that you only have $1,000 in your account, right? And I said that you can still trade futures. Well, trading futures is all about using leverage, and leverage allows smaller accounts to participate more easily than using a cash account by buying stocks with. So if the actual value of the futures contract you're trading is worth approximately $80,000, guess what? You only need $5,000 to trade that, to manage that. And you manage a position that is worth $80,000. Now, that is phenomenal, right? Here's an example. Let's say, for instance, just hypothetically, that the Qs right now are trading at $100, and let's say you want to trade $5,000 worth of shares, right? So you take $5,000 worth of shares and you want to buy 50 shares. Now, if the price goes up 50 cents, you only profit $25. You get the point? Because each cent is 50 cents. So if a trader wants to day trade by comparison the E-mini NASDAQ, which is the E-mini NASDAQ, I'm going to show you a chart to see the similarities. It's almost identical as trading the Qs. So for those of you that are trading stocks that are intimidated by shifting to futures, guess what? You have nothing to fear. So let's say the NQ is priced hypothetically at $44.40. The trader only needs $3,960 to buy one contract. And guess what, guys? This number right here, this value, $3,960, it represents the leveraged value. You only need about $400 to trade one contract. So remember, if you still have $1,000 in your account, you can trade actually 2 contracts of this NQ. Okay? Here's the difference that I love. If the price goes up 50 points, right, because we use this comparison, 50 points versus 50 cents, you profit $1,000 because each point is $20. Here's an example, guys, and this is a comparison between stocks and futures. And actually, I've selected here the Qs, right, this ETF, and SPYs, which you have on the right-hand side, and on the left-hand side, you have NQ and you have ES. This is E-mini NASDAQ and E-mini S&P 500. So if I was to cover the prices right here on these columns, you would swear it's actually the same price. Look at NQ, look at the Qs right here. You see the gap down, you see the gap down here. Even the moving averages, and it really doesn't matter what kind of moving averages there are here. But anyways, this is the 200 and this is the 20 period moving average, simple moving averages for both. You can see right here that they act the same. You can see that it gapped down, it based before continuing lower, moved back up, back down, and turning down. Needless to say, lower lows, lower highs right here. Same thing with the Qs. You see the gap down, you see the moving averages that are absolutely identical moves. So Qs versus NQ. Here, let's take a look at SPYs versus the S&P 500 in mini. Gap down, moving averages quite the same. You see the crossovers here. Needless to say, falling tops, falling bottoms, falling tops and falling bottoms on ES and SPY, both the same. Even the price bubbles when they set new lows right here were at same locations. Okay, so you can see the similarities and the charts. Now, an example I like to give, especially for you guys that are beginner traders and are trying to get initiated in futures trading, here are the moves versus buying power. And this is very, very relevant. So according to and this is a chart of NQ, you can see it right here. It's a 2-minute chart of NQ. And for this example purpose, we shorted this E-mini NASDAQ 100 index right here into 44.30. We placed a protective stop at 44.35. And for this particular trade, we had a risk of $100. And we were trading this with one contract. So remember, you need $400 in your account in order to trade this, okay? Our target 1 level was at 4,400, which is right here, and our target 2 area was 43.90, so a little lower into this zone. The reward was of 35 points, and remember, we were risking only 5 points. and we made 35 points. Guess what, guys? Our profit was 7 times the risk in this case. So in this case, we've risked $100 and we make $700 by what? Using $3,960 when all reality this is leveraged, and we only use $400 trading one contract. Moving forward to our comparison with the Qs, right? Same setup. You could see it right here. According to the setup, the short would have been into the same location as it was for the mini NASDAQ, right? The price was 108.20. The stop was 108.40. It was a short. We risked, let's say, $200 for the trade to get a round number of 1,000 shares. And we had a stop of 20 cents. Buying power needed for this trade, however, needed to be a little over $108,000. Target one set according to our technical analysis into 107.80 and 107.40, around these areas. Our reward was of 80 cents. Needless to say, it works perfectly. So the strategy works, entry works, stop works, everything works. But guess what, guys? When it comes to profit, we made $800, but we needed $108,000 in order to take this trade. The profit was 4 times the risk, so it was $800, but using a little over $108,000 in buying power. But I want you to imagine this. If you would have traded futures with $100,000 buying power, you could have taken the same trade, NQ short in the same location using the same stop, 5-point stop, with 25 contracts compared to one, and 25 contracts times $700 the profit, you would have made $17,000 using the buying power that you would have used to short the Qs, and made only $800. Okay, so that's a big change. I would take this any day of the week. Okay, so 17,500 profit versus 800. I mean, it's actually a no-brainer. Would you rather trade the Qs or would you rather trade NQ? Right? I think it's pretty simple. So let's take a look at some of these trades and how they work. Remember me saying that this is a continuous market. It's a 24-hour, close to a 24-hour market, and you can trade the Asian session. And actually, this is the Asian session that was open. You can trade it anytime. You can get initiated in futures anytime. And guys, if you're a stock trader, you want to make the transition, paper trade it for a while and see how that works for you. Okay, so in this particular setup, it was 8 o'clock at night. 8 o'clock at night, I saw the setup develop according to our technical analysis. This was a buy signal for us into this area. You could see my entry 2062.50. I took it with 10 contracts in this point, and I had a profit target right around this area. You see where my price bubble is right here, where my target area is right here. I have a limited order to take profit around this area. And guess what? I went along and, you know, kind of like went to bed, you know, had dinner, went to bed, whatever. So I left the trade on. Volume during the nighttime is not that great. So there's not a lot of volatility, and that helps our trades because moves happen in a more orderly fashion. They're not whippy. You don't experience the whippiness. So it's nice, smooth ride either to the upside or the downside. And usually the trend continues from the New York trading session. Okay, when I woke up in the morning, you remember my setup here with the 3 bars and consolidation. This is when I took the snapshot. And besides, yeah, I actually took a snapshot of the trade when I first got in and posted it on Twitter. So a lot of these trades, if you follow me on Twitter or subscribe to our YouTube channel, we post them before they happen, so before I even take the trade. And then you can see my position. So everything is transparent. So you can see it here. This is when I took the snapshot, and this is what happened overnight, and this is what happened actually at close to 3 a.m. in the morning. So this was the 3 a.m. point, and this is what I woke up to, $2,250 with 10 contracts. Guess what? You don't have to trade 10 contracts. You trade according to your risk limit. If you have only $400 in your account and you want to take this with one contract, you would have made $225 overnight doing nothing while you were sleeping. Okay, here's another trade, and this was from yesterday, August 16th. And yesterday we had a pretty whippy market. Actually very tough to trade because we had a lot of sideways action. Okay, a lot of sideways action. So you can see the entry right here, 46.35. We had a stop of 46.25. We were risking 10 cents. Our exit, half of our exit was at 50 and half was at 46.58, and we averaged on this trade 2 hours on this trade yesterday. We took it with 10 contracts. You can see the result right here, $1,550. If you would have taken this with one contract, remember, $400 in your account, you would be up $155. It all depends on your risk level. All right, here's another example, and this is also yesterday, very recent in a sideways market. We teach strategies that work in any kind of market environment with very, very high odds. And if you get a chance to actually listen to our YouTube pre-market game plan, you can see that we have our game plan set before the New York market opens, so we know what to act at the open. Like today we had YM short. Revisit that recording and see how it played out. Okay, so YM scalp short entry 18,537 with a stop at 18,545, target 18,520. We had an 8-point risk and we made 17 points. That's a little over 2 hours, right? So 5 contracts, $425. Guess what? If you would have traded with one contract, okay, you would have made a little less than $100 on this trade. But it was a scalp, okay? Another trade, also yesterday, okay, GC scalp, and again, it works either whether you're taking trend trades or you're taking scalps. This method works every single time. So GC scalp, entry 1354, the stop 1353.50, target 1355. Look at the stop, guys. Look at the risk. 0.5. It's a 2-hour trade here in a sideways market. Totally okay. I see traders all the time exhilarated in chat rooms that go over the roof and they lock in if they are up 1 hour. Okay, 5 contracts with this trade, P&L $500. If you take it with one contract, $100. Another scalp right here, CL, and this was on the 10th. It was last week. It was also a scalp, but it was a beautiful textbook scalp. This is our entry right here. This is our stop. You could see our prices right here. It went exactly to our projected target of 41.50. And again, we post these targets pre-market. So before they happen, we post the targets hours before they happen. And look at our P&L, 16,150, and this is with 15 contracts. So if you would have taken this trade alone with one contract, you would be up over $1,000 with one contract. Needless to say, $400 in your account. Okay, YM. It's all about location, guys, and knowing when to get in, the timing, the precise timing, the precise location, and calculating your projected targets. And this is what we do, and we are acing this. This is our entry, 18,500. This was our target. And again, these were all posted on YouTube before they happened. This was another trade that we've done. YM, another trade short, and this is, we had an initial of 10 contracts. We layered out 5, and we still up with 5. This was us trailing, and as you can see, this was before the market even opened, before the New York session opened. We were up $925, and the market hadn't even opened. CL, again, another trade, and this was from June 22nd. This is one of signature plays right here. We took this short under $49, and our target was $48.50, up $500 with what? One contract. So going back and looking back and saying, are you able to make $500 a day trading with a 5K account? You can make more than that. All you need is to average. All you need is to average. I'm not saying that you're going to make consecutively 500, 500, 500, 500. No, you're going to have a day when you're going to make 1,000. You're going to have a day when you're going to lose 400. You're going to have a day when you're going to make 300, and you're going to have another day when you're going to make 1,500. But the average of $500 is so doable, and it's minimum for a $5,000 account. Here's another trade in CL that we've done. You can see the P&Ls right here, and most of these were posted on Twitter, on Facebook, etc. before they even happened. You can see the entry, the stop, the risk, 10 cents. We're risking very little, but we know exactly the precise areas when we do it, and we know the timing when to strike. That's very, very important. You can see our exit area layered out. Risk per trade in this case was $1,000, but this is what we've done. Over 4 hours, 4 times our risk, almost close to 5 times our risk. $4,600 with 10 contracts. Needless to say, if you've taken this with 1 contract, you would have made $460. This is what I call money working for you. This is another trade. It was done in the afternoon, July 28th. And this is another, this is CL as well. You can see the entry, the stop, the target, the risk, 5-point risk. And guys, with our method, you're not going to go for ticks. You're not going to go, oh my gosh, I'm going to make 3 ticks, 5 ticks, 4 ticks, 3 ticks. No, that is the wrong way to trade futures. If you have been trading around traders that go for ticks, there's something really wrong there. You have to go for points, and knowing when to get in, when to get in, when to get out, where to place your stop is essential. They are missing an important piece, and they're just mini retail traders that are trying to make ends meet. Okay, so here's the thing, guys. Profit 15 points on this trade, 10 contracts. We made $1,800, a little over $1,800 in this trade. If you would have taken this with 1 contract, you would have made close to $200. Okay, now, remember what I said, that location is everything here. Now, what I want to show you guys here is this is one of the strategies that we teach right from the open, In this particular case, this is the 932 strategy. I have a lot of traders that ask me, share me your strategy. This is my strategy. I trade the 932, I trade the 932 strategy. Okay, this is one of my strategies. I took this short right here under the 2-minute bar. I placed my stop above the 2-minute high, and I let it trade. I knew that my target area were target 1 and target 2 based on a very thorough analysis and based on very, very thorough analysis. And not only that, but we have precise locations where we know that institutional traders are looking for covering. And this was one of them, and this was the second one of them. And remember, there are precise prices. There are 4 precise prices and 7 precise zones when these targets or buys or sells occur. Okay, so this is one of the strategy. It had a beautiful follow through to the downside. It actually had a really nice continuation lower. You can see the black line right here. This is something we teach in class. This was our final target. It went very, very close to that particular zone. Trading universe and how I stay focused. Guys, it's no secret. When you're trading in minis, this is all you're going to be watching. In all reality, I'll only watch Y, M, E, S, and Q. For those of you that are new and have no ideas what these symbols are, this is the mini Dow, mini S&P 500, mini NASDAQ. This is oil, which we love to trade, and gold right here. Very seldom we trade the dollar, so very, very seldom. So but this is we have on the charts just to watch and see how it is behaving in correlation with the rest of the indices. But needless to say, our main focus are these 5 charts. This is all we watch. We don't watch anything else. We don't trade bonds. We don't trade anything else. This is our main focus. We don't scan through 4,000 plus stocks. We don't pay attention to earnings. We don't care. We have these. They never report earnings, right? That's a big advantage. So we just trade them. So do the things you love in life. You have to focus for 2 hours. You learn a method and you run with it. And that is the outcome that you can have from your method. So how can you turn $5,000 account into $100,000 account in a year? Well, basically, if you average $500 a day, and like I said, this is an average. It's not, and most importantly, you might not get this result if you're starting trading tomorrow. So you have to have a little bit of experience. I would say at least 2 to 3 months you can get there after you learn the right strategies and after you learn how to do it and when to do it. So $500 a day, that's $2,500 a week. $2,500 a week translates very easily into $10K a month. This is how you can do it. And 10K a month, that's 120 a year, okay? Time flexibility, like I said, for those of you that have jobs, for those of you that are still working or are working in shifts or are never home in the morning or evening or you know, able to take a trade, guess what? The market is open almost 24 hours and there is a setup happening almost every hour. Not only that, you can day trade and you can have great swing opportunities. There were some amazing swing opportunities in oil this year. Not so much, it was very, very choppy indice-wise, but you know, for oil, even for gold, were some really great swing trading opportunities. This is the time flexibility. The gray area represents the extended hours, so you can see it represents actually 2 trading sessions and actually an overlap of the 2 trading sessions. It represents the Asian trading session and the London trading session, and the white area represents the New York trading session, which actually is half of it overlapped with the London session. So you get a lot of dynamic movements into the first session, exactly into like 11 a.m., the time when I kind of like to be done trading. Okay, so you can make a lot of money in extended hours as well if you have a job or if you're working in shifts. So why do you need to learn how to trade with the big sharks and why it is important to learn the method of institutional trading? Well, I think it's very easy because the institutions are the big sharks and traders need to learn to swim along with them. They need to know where their interest zones are, where they like to buy, to sell, to hold. Also, institutional sharks see your orders on their breakfast menu, because guess what? If you're too tight with these futures, they snack you up. They really do. They don't have no mercy. Institutional money create the current that moves the market, the big wave. So you want to be participating in the big wave in the market. You don't want to go for little ticks, right? You want to go for big points. You want to go for 20 points, 30 points, 50 points. Today, I had a trade for 20 points and I was disappointed. I had a trade off the open, YM short, took only 20 points, and I was disappointed because I only took 20 points. Imagine a trader that trades for ticks, okay? So experienced traders have no fear when they're trading. They know how to surf the waves and stay with the wave and ride it until it's really safe to exit, okay? Remember, next time you're in the market, it's lunchtime somewhere, and they are very, very hungry. Would you rather dine or actually be served as the main course? Okay, so we have precise hours when we strike, we have precise patterns to act upon, and we leave nothing to chance. This is what we do. This is what TradeOutLoud is all about. And I promise you guys right from the beginning that I'm going to share my favorite strategy to trade, and it is my morning strategy. We have 3 strategies available: morning strategy, afternoon strategy, and extended hour strategy. And what we teach you is what time frame to trade for each strategy, because each strategy is different. So in the afternoon strategy, we're not going to trade the same way as the morning strategy, and we're definitely going to not trade it as treat it as the extended hour strategy. We're going to teach you how to pick what to trade, how to pick your favorite trade for the day. Like today, I had YM. That was my favorite trade of the day, and I focused only on that. I didn't care what the others were doing. So when to take the trade actually is very important, because we have precise timing on everything, and we have precise, I'm going to share with you my exact times when I strike and when I look for precise setups to happen, and knowing when to strike, that is very important. So not only that, but I correlate that with my entry, my price. My price is very, very important. I have 4 prices that I pay attention to, 4 prices, and these prices need to line up with my setup, with my strategy, with my bias, and they all together form my entry, either for a long or for a short. And once again, we trade for points, not for ticks, so we're not amateurs. Okay, so the TradeOutLoud strategy, what it consists in. Our favorite time to trade is from 9 a.m. to 11 a.m. Why? Because it's the best time to trade. We have the overlap from the London session, so we have a lot of dynamics behind it. We have catalysts from the news that is coming out either at 8:30 or 9 o'clock, so we are prone to having a big, nice move that can propel the market in one way or the other. Our watch list is very simple. Basically, we watch NQES, YMCL, and GC. That's all we watch, and from all of these, we pick 1, maximum 2 trades That's all we do. And 100% our focus goes into that one particular trade. Strike times. Guys, if you have a pen and paper, write down these times, because these are the times when sharks strike. It's 9:32, 9:35, 9:45, 10 o'clock, and 10:30. And at 10:30, that's the last trading. That if you're still in a trade, then you're going to trail it into 11 o'clock, or that is the last time. The 10:30 is the last time when there is the last trading setup for the day. That's when it sets at 10:30 a.m. Eastern time. That's when it sets. If you lose that, if that doesn't form at 10:30 a.m. Eastern time, then you're done for the day, because you're done probably in the morning, so up to that time. So what are you going to look for? Okay, so I'm going to tell you what I look for. So either whether it is 9:32 or 9:45 or 10:30, I look for the strongest or weakest E-mini. So I determine my trend. That's very important, to determine your direction. And if you're looking for direction, make sure that you're looking for a very strong trend. Okay, the one that is relevant on a higher time frame and that continues onto a minor time frame. So you're going to look for a very clear direction. If you don't have a very clear direction, then you're in a sideways market. That's going to be a little choppy, and it requires a lot more experience. And also, you're going to look for the precise location. Like I said, there are 4 price areas that I look for. And there are areas of support resistance. And what I mean by that, it's not only supply and demand. And guys, if you're looking for classic supply and demand, you only have 10% of the puzzle. That's why you're not making the big bucks, because there are 7 layers of support resistance and price price points where you have to look at. Also, you have to identify the pattern that you have to be able to identify the pattern before you take the trade, to make sure that the trade will assure you continuity. So what that means is that does it have room to follow through, or are you going to be stuck in the trade forever? So bottom line, guys, you have to pay attention and see if the trade that you're taking has odds of following through. And there's one chart that you look at. There are 2 candlesticks that actually can tell you and can predict you whether you're going to have a follow through or a sideways day. All right, here's another strategy that I've used. And guys, if you're smart, if you have been trading for a while, you know what the strategy is. We are looking for precise prices. This is the chart this is the daily chart that I've been telling you guys about. Okay, and this, by looking at just these 2 candlesticks, you're going to be able, we teach traders how to read if we're going to have follow through or not by reading these 2 candlesticks. Again, pre-market game plan, this trade was made public on YouTube, on our channel, before it happened at 9 a.m. Okay, so we informed all our traders, and not only our traders, but all our subscribers. We keep nothing secret. Okay, so we showed exactly the trade that we're going to do. We said we're going to buy at a 46.20, and we're going to have a target of 46.50, and we're going to have a stop at 46.15. This is what we said. You could check it out, youtube.com/TradeOutLoud. On this particular day is on 7/21, and you could check it out. All right. I mentioned tax advantages for trading futures, and one of the things is that simplified reporting. Guys, you only get a 1099-B form from your broker, and that's what you have to fill in your tax return, and you're done. No sophisticated reporting like you were required for stock trading. And the 60-40 rule, for those of you that is not familiar with this or is not residing in the United States, you could Google it and you can find out more about it. Fast money, guys. You can make a lot of money fast with futures. Futures trade 10 times with much more exposure than regular stocks, and prices in futures tend to move faster than in the cash market. Guess what? The best thing that I love, the one thing that I love about trading futures is that there's no pump and dump, no rumors, no stock manipulations, no upgrades or downgrades, no earnings. There's absolutely nothing. And if you're questioning whether this market is liquid or not, guess what? ES, which is the S&P 500, trades over 2.3 million transactions per day. So are you going to get slipped? No. All right, low commissions. Talk to your broker. I usually pay about $3 per side. It depends on the volume that you trade, and it's negotiable. I trade on the Thinkorswim platform. I love the platform. I trade anything on it, and because of the size that I trade, I really don't care about commissions. But if you have a much smaller account, make sure that you check with your broker. You could talk. You could actually trade with any broker on the planet. Okay, both sides of the coin, long or short. Okay, you can go long, you could go short. It's not like they're hard to borrow. Okay, you don't have that impediment into your trading. Also, conclusion: stock versus futures. If you see if you have anything against trading futures, or if you're not yet sold on trading futures, just shoot me an email. I'm really interested to know why. The stocks, you require a larger account, and you have to have a large position, and your move has to be wide and big in order for you to make some money. You have tons of charts to analyze, 4,000 to 6,000 depending on your universe, and less focus. For futures, you need a small account, get great leverage. You have small position moves, minimal charts, more focus because you only focus on 5 or 6 charts. You take short position more easily. You have central clearing, reliable data. It's great for hedging. Great for hedging. You don't know in which direction the market is going to go. You could take NQ long and YM short. Tight stops. Odds are NQ might stop out and you might have a run for YM. So you're going to make money. Okay, so it's great for that as well. No gaps, better commissions, etc. For this class only, and for those of you that are attending today, we only have 100 seats left. We're offering a live educational webinar. We're going to teach you how to trade the open, and that is tomorrow, August 18th, from 7 p.m. Eastern Time. It is a free event, but guys, you better hurry because I only have 100 seats left, and most probably if you register really late tonight, we might not have available seats. The session will not be recording because the information that we offer is proprietary and we don't want it shared out there. So it's just for these 100 participants, and I'll share with you the process I follow before each trading session to help you select the best odds trade for maximum risk to reward. And here's a class summary: how to correctly perform a pre-market analysis the way I do it, the way I post it on YouTube, how to trade gaps, how to select the trade of the day, how to plan and execute your trade. So guys, take notes, and again, I am urging you to register now. I only have 100 seats, so if you want to register, go to TradeOutLoud.com/learn. It is free. Okay, so if you have any questions, feel free to email me at info@tradeoutloud.com. I'm afraid my time is up, and we're going to have to welcome the next guest.